And we are back. We are live here on our YouTube channel. It's our daily show we call the Halftime Report, where we're going to go through these markets one step at a time. And it's Wednesday, June 23rd, 2021, hump day here in the middle of the week as the markets are trading near all-time highs on most of the indexes. There's some split in the sectors. We're going to break it all down, analyze it, and have a discussion about what's going on out there across the markets with our coaches here at Tackle Trading. And welcome back to the community. Hashtag Team Tackle in the chat as you're coming into the conversation today. It's always a great way to get it started. Appreciate you guys as always. And appreciate those thumbs ups. You know, as you come into the show, it really helps get the word out, get the analytics out. We get a lot of new members in here at Team Tackle as well from doing that. Out there, we've got Coach Matt and Coach Tyler. We're going to start talking about the markets, but pleasantries first. Matt, how you doing today, sir?
Doing fantastic, Tim. Excited to be here with Coach Ty, Jedi Options later on today, yourself. Excited to hang out with the crew on this amazing, fantastic Doji Wednesday.
Doji at all-time highs at resistance on the S&P 500 in the middle to late summer here, Tyler. Nothing wrong with that, man. I don't mind market conditions like this at all. In fact, I like them. It kind of allows you to set up different sectors, different stock trades, all kinds of different analysis. The low volatility is just fine by me. But how are you doing today, sir?
Doing well. Yeah, very, very impressed by the bounce back on Monday. I mean, did not think we'd be having this conversation last Friday. Let's put it that. Put it at that. Yeah.
Well, it was a different market, and there still is a lot of concern in some of the charts and some of the sectors. We'll take a peek at it here in just a minute. But before we go too far down the analysis road here, I want you to bring up tackletrading.com, and I want to continue to have a discussion about what we've announced here this week and last week, that we're launching our Trading Labs product. And guys, if you're out there and you're Team Tackle, you're a member of our community, Trading Labs, just like many of our other products, we offer a subscription to it and a trial to that subscription. There are three different teams within Trading Labs. There's Cash Flow Vikings with Coach Mark. There's Team Dynasty with Coach Emily Muriori. And Coach Tyler, you actually run Team Phoenix. And we're going to start those Trading Labs as soon as next week. And you'll be doing yours on Wednesday afternoons, actually, Tyler. Now that we got you here, talk a little bit about Trading Labs and what your excitement level is and what your approach is going to be to that first lab next week.
Yeah, I mean, we don't really do anything kind of halfway here at Tackle, so we're bringing out the big guns and going to try to make this as valuable as possible. You basically are just going to be able to look over my shoulder and see what am I doing? How am I analyzing the markets? What kind of trades am I looking at? How do I find trade ideas? You brought up a really good analogy, I think, earlier, Tim, with the difference between the Trading Labs versus just jumping on a trader's lounge and getting questions answered. I don't know that I can say it better than you could. Can you tell them the analogy you used? I don't know if you've shared that with the team.
You know, I give so many analogies, Tyler. Now you're making my old brain trying to remember how I described it to you. As a matter of fact,
the Home Depot one.
Oh, that's right. Yeah. For essentially, guys, I mean, when you're thinking about the Trading Labs, it's like basically tutoring under a master blacksmith or a master architect or a master home builder, right? Somebody that does that intricate, fine finish work, and you go work with them for 3 months, 6 months, a year, and you're working alongside them. You're watching the way that they approach the market. That's kind of what Trading Labs is. It's not just you going to Home Depot and asking the guy in the or the gal in the tools department how to use that saber saw, right? No, you're working alongside in an application-based environment with a subject matter expert. And I know exactly what the value is going to be, which is one of the reasons why, quite frankly, it's a very simple offer, guys. Try it out. It's a 15-day trial for one lab. It will convert to $49 a month. And for all three labs to be able to be alongside these coaches, $97 a month. I think it's a pretty simple offer, and I know people are going to love it. So hopefully that was what you're looking for, Ty, is that explanation.
Well done. Yes. And I am very excited about it. And yeah, free trial. I mean, you got nothing to lose. Come check it out and you'll love it.
Yep, absolutely. I dropped the link to the store. You can go start that trial here today, guys, and we're going to start those labs actually next week. So more on that to come, but let's get back to the market and let's start talking about what's going on out there. Doji, little green Doji, just turned to a little red Doji. That might have been one literal tick on the S&P here because we were right near the flat line, 0.00% up there on the index. Ty, what you seeing here technically?
I think it's incredible how quickly volatility comes into the market and exits. it's when you look at the Friday and then Monday candle, like you have some pretty big swings there.
Mm-hmm.
And it's almost like the market corrected itself and then went back to taking a nap. It's like you got that volatility in the wake of the Fed meeting, nasty little sell-off on Friday, monster rebound on Monday, and then the market's like, hey, my job is done. I got you back to where we were. Sorry about the little upset. Now let me go back to sleep, back to the summer doldrums. Give me a doji.
Mm-hmm. Matt, this is one of those, fire back type of situations. Last Friday, we were having a different conversation as the market was selling off. We fired off on Monday. Now we're sitting here on a doji midweek. How are you reading this price action on the broad markets?
Yeah, kind of like what Tyler said with the job well done. We sold off last Friday, fire back on Monday. Yeah, it's kind of like Jay Powell did the same thing over the last 5 days, as he was like, wait, that's not what I meant to say on Wednesday, so let me correct everything by the following Wednesday. We're all good. Inflation's not a problem. Interest rates are going to stay here forever. We're back to the high. We're good. No, my read on the market is the volatility that did persist last week, even though we're back into the all-time highs. That's not the read when you look at the sectors, right? And so
Right.
I do think the sectors, much more than the market, is really telling the story right now. And again, Tyler, I've said this many times in the last few months, and I'll say it again with you here. But it's like you say in the market, the anatomy of a bull market is rotation. It's not about everything going down. So when you're looking at the broad market and you're seeing a technical scenario where you're kissing up against those all-time highs, very similar to what we were last week, and you're looking the sell-off on Friday compared to the buyback on Monday, and you're like, oh, we're back to reality, right? We're back to the same market. And quite frankly, that's what I'm reading today in a lot of the media out there is the cyclical trade is back. Look at energy up. Look at finance up. Look at industrials up. Look at materials back up. Oh, we're back to the cyclical trade. And I'm like, no, the market is still confused. The market is still confused simply because we have achieved the similar price range that we did last week doesn't mean we have the exact same scenarios playing out in the marketplace. And I get it. The media has a very difficult job when there's mixed messages at the Fed. We haven't seen transparency at the Fed, and you do see a little bit of volatility. But let's take a look at those areas of the market that did get caught up aggressively in that volatility, and let's take a visual identification to see if that cyclical trade is back, because I have a different read than other market participants regarding the cyclical areas of the market, as I still see them as a little bit weak right now. When you take a look at energy, and one of the things, and I saw this, and again, I'm not throwing shade here. People are just trying to give context to what is happening right now in the marketplace. But when you look at energy, energy's up a good 5% this week, right? And again, you might be looking at that saying, yeah, cyclical trade is back. Cyclical trade is back. But energy never got blasted like the other areas of that cyclical trade. It went down one day, found support at the 50-day moving average, and with the strength of crude oil as the backdrop and the backstop on energy price right now, it was pretty apparent to me anyways that this was we even said this on Monday morning, guys. Energy's still here. We're all looking at this as a little bit of an overshoot based on mixed messaging that we saw last week. So energy, given the strength of crude, and Tyler, from a technical perspective, would you say you're that concerned here with energy?
No, I mean, you're right. Compared to some of those other sectors,
Yeah,
this has held up better for sure.
and specifically to the other sectors. But when you take a look at those three other sectors that we're obviously a little separated from energy, right? Even at tackle trading, when you were looking at the rankings from really kind of February on, it was industrials, finance, materials, and then energy, right? And then energy, as energy was doing more recovery analysis. When you look at what finance is doing, when you look at materials, when you look at industrials, I just got this as a bearish retracement, guys.
Mm-hmm.
That's all I have this as. I have no other context. I have no other opinion. I have this simply as a bearish retracement and nothing else.
Which I think is spot on. I mean, and it's a good point, right? The S&P would make you believe, yes, last week has been fixed. The damage has been recovered, and it hasn't. You're right. So where are the areas you're most concerned? Well, it's still the areas that got smoked the hardest last week.
You're still concerned.
Mm-hmm.
That's
yeah,
my
you're still
point.
concerned. It hasn't changed. Yeah, I would agree.
And where are those areas that you're still looking for is, hey, listen, there might be some really good trade environments. You're still looking at discretionary.
Correct.
You're still looking at tech.
Mm-hmm.
And now you're starting to look a little bit clearer at comms as well. And so I see this market doing the same thing it's been doing in the last few days. It's just when the market's oversold in the cyclical areas, they're going to be brought back up. And sometimes they're going to be aggressively brought back up. But again, on Monday, when we detailed this in sectors, we talked about, yes, we fully expect these areas of the market to come back into resistance. But that's not the telltale sign. Remember what the telltale sign is. Go back to technology. The telltale sign is bear stop out day. When we get that bearish retracement that confirms back down and then gets blown out of the water, it's at that point where I'll be like, yeah, let's get back. From a swing trading perspective, cyclical's back. But not until I see that.
Yeah, we have to see that play itself out. And obviously, what I'm reading out there on a day-by-day basis, Matt, as I go through my process, my routine, all that kind of stuff, that's not the narrative I'm picking up in financial media right now. I feel like they're desperately trying to find a new theme, and it's not necessarily any kind of new action. In fact, just a continuation from some of the weakness in those areas from last week, but strength in the areas that were strong as well that held up nicely.
They're confused right now. Yesterday, the financial media was reporting a death cross in Bitcoin, but then when Kathy Wood bought it, now they're all reporting it's really good to buy right now.
I know, I saw that.
They're confused. Let's just give them a little bit of time, but they're confused right now.
They are definitely confused. All right, I love that breakdown on the sectors. Let's take a quick flash through the indexes if you can as well, Tyler. I like it when you do this each Wednesday. Just tell me what you're seeing from a relative strength or weakness perspective.
Well, to go along with Matt's comments on the sector, the Nasdaq obviously is most driven by technology, and it is at a new high, right? It is at a new high, and the relative strength over the last week has been telling. What value took away, growth gave. I think I said it the wrong way, but value's pain was growth's gain, and that right there is why the entire market, the S&P 500, still looks so good, because tech stepped up and filled the void that was left when the cyclicals fell out of favor. I think you've got to be encouraged by that and emboldened by that. In the absence of that, it would have been a lot worse. It would be a completely different story if tech and growth did not pick up the slack when value got smoked last week. So Nasdaq looks great. There's nothing not to like here. Trending above the 20, above the 50, new high yesterday, little pause today. Fine with me. Fine with me. I think this continues to be a strong area, and until otherwise, the path of least resistance is higher there.
Mm-hmm. Go ahead.
Well, the other thing I was going to say today that you're seeing a little bit of strength in is small caps too. So Russell 2000 up 0.5%. I think this is the leading index today, which is nice to see because these guys got smoked last week. So pretty nasty 5-day sell-off, and then nice recovery so far this week. Not back up to the high yet, but I was happy to see these guys rebound quickly back off the 50 undercut there. So I like the relative strength today in small caps. I think that makes me pleased because Nasdaq, S&P taking a breather, Russell popping 0.5%. It's good. It's indicative of rotation.
I got a small question for Matt on this one, Matty, if I can. Yeah, you have other thoughts there as well. But with this one here, you have some interesting technicals that, in my eye, quite frankly, very quickly, just give me a little bit of a mixed read. You have the deeper retracement that broke below the old resistance channel, but that could be potentially a higher pivot low. I mean, how do you kind of marry all of that information together? Is that a bullish sign if we fire back? What's your read?
I do think it's a bullish sign, and I think what you're going to see that higher pivot low as it approaches the breakout channel is resetting the distance that the market is running into a clear breakout. And so, yes, I do think I don't want to say it's significant, but I do think it is fairly important that we did find an increasing support level in the Russell 2000. And my point was kind of pertaining to that. If the cyclical trade is back, and small caps are part of the cyclical trade, if the cyclical trade is back, the areas of the market that I will be looking at for cyclical from a swing trading perspective, I'm not talking investing, is quite frankly energy and small mid cap stocks. I think finance, industrial, and basic materials specifically, those three areas of the cyclical trade, those are the areas that I'm mostly concerned about.
Mm-hmm. Yeah, that makes sense. All right, let's flash through the commodity markets next if we can here, Tyler.
Sure. Real quick. And it's those three sectors that were leaders above all of the other sectors. And so it does make sense in the short term to see a little profit taking there, reset kind of the portfolio, and then come back at a later date.
Mm-hmm. Yeah, it makes sense to me as well. Crude light, they had inventory data this week, which quite frankly has become a little bit of a silly joke because they always miss it. But you did see a big draw in inventory. The chart still remains very healthy and strong. But Tyler, there's no real new trade here, is there? Just a continuation of the trend in my estimation. What you read here on the chart?
Yeah, I would agree. I mean, you could say, well, this was a break. You broke a prior pivot high. Well, that's true, but not all breakouts are created equal. That was a minor pivot. Breaking that is not as significant as, say, the breakout of $67, which was tested multiple times. That's the kind of breakout that really gets traders excited. This one, you ran up a couple bars into it. Nothing to see here. I think it's good. It's bullish. But there's a difference between being bullish and being in a strong uptrend and being a trading opportunity. Bullish, yes. Trading opportunity, no.
Mm-hmm. And that line above me makes me want you to back the chart out just a little bit here.
It's got some history there.
It's got some history back there, doesn't it, Matt? We're going to be fighting into some old levels here, obviously, as crude strength is going to be met with a resistance zone, which is pretty significant on the weekly. Anything you're going to be watching for in crude here, Matt?
No, for me, the trade was when it broke out of 65, or 66, excuse me. Ever since 70, 75, I see this more as a cash flow environment, whereas the strength in crude aids my analysis in energy.
Mm-hmm. Yeah. In fact, that pattern kind of feels like a covered call pattern to me. You had a nice little gain, then you ride a couple calls and maybe pick up some cash flow up at resistance. But all right, gold next here if we can. GC contract. And Tyler, give me a quick technical read. You want to talk about bear retracement? I still see that in my eyes potentially developing, although I know there's some major support down here that needs to fight for itself and confirm before we can really call it there. Tyler, what is your read here on the chart?
Well, look, if you wanted to be really excited about gold should have followed the S&P 500 playbook and had a bit more vigorous rebound off the lows here. So far, this is pretty weak sauce after such a large decline, which makes it feel like a dead cat bounce, a bear retracement, a rally to be sold, not bought. This is not really compelling enough to do anything on the long side for me. You need time for this to develop more bullish. But yeah, for now, I would agree. This is a rally to be sold until proven otherwise.
Matt, any quick thoughts on gold here?
Needs time. Yeah. Needs time. I like the zone it's in on the weekly chart, but it's not a pretty chart. It's going to need some time.
Yeah, going to need some time. All right, quick look at the currencies then next here. Let's take.
Can I just add one quick point to Tyler? Mm-hmm. I do agree with Tyler 100%. Like if you're reading the cyclical areas as bear retracement, you're reading gold right now. It has to be bear retracement too.
Yep. Yeah, the daily pattern. That's where it's at. Yeah, it is what it is. All right, next one here, Bitcoin real quick, or the dollar, either one. Dollar's fine. It's fading off the high. I don't see really much in that chart besides just maybe some correction back and filling from last week's rally as the market's still trying to process what the Fed's saying. It does give me a chance to say the Fed Chair Powell was talking inflation yesterday, Matt. And of course, what did he do? He downplayed the current pace of inflation, said it is a little higher than he expected, but he continued to call it transitory and even went as far as to compare it to the 1970s inflationary environment. And I'm like, Bro, you don't say the quiet
That's a
part
bad
out
one.
loud.
That's a bad one, pal.
Yeah.
That's a bad one. That's not where you want to put people's heads, pal.
No.
Not the 70s, pal. Say the 80s.
Say anything besides
Say the
70s.
80s.
70s inflation, gas lines, gold prices going crazy, everything in the 70s, right? I mean, we had rampant inflation in the 70s. So
okay, just somebody inform me when Powell was last correct on anything.
I thought that was,
besides interest rates never going up.
Well, he's continued to be correct on the fact that they won't talk about tapering. So,
yeah, but I'm actually talking about projections.
Oh,
I don't know. I read the testimony from Powell. I felt the entire time he was trying to walk back what he said last week simply because the market puked up what he said last week and he didn't add anything to the actual conversation.
I agree. That's exactly the way I read it as well. All right, last one here, Bitcoin. If you can hear Ty, and I want to get a technical read from you, Tyler, because obviously this has been all over the news in terms of headline here, hot take there, what's going on. But what are you seeing in the chart now? As we did have a breakdown, we dipped below $30,000 for the first time since January. That's been all over the place. We're seeing the volatility here. How do you unpack this chart here, Ty?
Yeah, I actually wrote about Bitcoin in the tackle today this morning. You have a couple of, I think, interesting lessons with what's gone on in Bitcoin over the last week. First of all, when you drop 1, 2, 3, 4, 5 bars, and by the way, that 5-bar drop was a 20+% decline, and then you break support, that's what you called an oversold breakout. Just as Matt talks and Tim talks all the time about the stocks that run up to resistance before a breakout aren't as compelling. But here's a situation where shorting within stock breaks support after having dropped so much is a high risk endeavor because of what just happened. You know, it finally decides to bounce. So I didn't like the setup going into this support break anyways. On the bull side, you've got to be impressed. I mean, this to me so far looks like a false breakout, a fake out, a bear trap. Anybody who shorted this on the break at 30,000 is squealing right now. Now, you could say, well, Tyler, you're only 1 bar later. You know, how do you know that it's going to stick? I don't. I just know so far, shorting that 30,000 break was a money loser. I like the volume, the heavy volume that came in too on that shakeout candle. Would love to see this close a little bit stronger. I don't know that there's a trade necessarily here, but so far that was a support break, a fake out.
Yeah, there's no trade there, but I appreciate that breakdown. It is an impressive hammer candle down there, firing back on some volume. But Matt, far too early for any kind of trade analysis here on the chart for me.
My read is very simple. The only thing that's transpired this week is we now know the zone of support. That's it. Like I get the news. Kathy Wood bought Grayscale Bitcoin Trust, and everybody's freaking out over that. This to me's got a mile to go before there's any buy on this.
Yeah, I agree. I think it's a ways off for sure. And as a trader, there's much more clean areas of the market that I can go find things that actually are not a ways off. There's a lot of good breakouts out there. In fact, Tyler, and even some retracements as well. But Tyler's going to be highlighting a few breakouts here in a few minutes in our Jedi options section. So I think continue to stay away from the short-term analysis on Bitcoins. Needs some time, just like a lot of these things that have seen the pressure. So, all right, guys, that's our market skyline. We're going to move into some quick stock talk. There's only a couple of news items actually that I want to highlight here today, and then we're going to have another round of Jedi options. And Coach Tyler is going to be looking at Tesla, who's breaking out here recently, versus Costco, which was a candidate on this week's options report, and analyze how you could approach them from an options perspective in different ways on those two different breakouts. So we're going to look at that here in just a minute. Tyler, a couple of quick ones though. Let's start with Ford. Actually, I think this is another extension of a story that's been happening for quite some time. You had a nice deeper retracement developing, little pop up off that moving average here today. Ford actually reported that their Mustang Mach EGT, and their Mach EGT Performance Edition are outperforming expectations on their actual EPA ratings. They're getting nice sales metrics from them as well. They had a price target upgrade and a reiteration of overweight from two different firms within the last 24 hours. Some positive juice behind Ford, and the chart caught my attention. Tyler, anything that's grabbing you here? Do you think there's a trade potential here? And what are you seeing in that chart?
Yeah, look, anytime a stock breaks out and has the type of momentum, the type of volume participation that Ford had when it ripped from 13 to 16, those are the ideal trends to look to buy dips in, because they have the wind at their back, they're strong, relative strength, momentum, all the rest. So I think this entire time, what's interesting is it made you be patient, right? Like if you were, chomping at the bit, trying to buy the first sign of weakness because of the strength of the preceding advance, it made you be a little bit patient, and patience has paid. The thing finally bounced after retreating for 2.5 weeks. Could there be a trade here? Sure. I mean, look, if you were going to buy the dip, I don't know what else you're waiting for, quite frankly. I think somebody could have got triggered in this before today, quite honestly. But if you were looking for some type of upside confirmation, I don't know what else you want, Tim. Quite honestly, it's up 3.5%. You're going to have a higher than average volume bar today. You're taking out the pullback kind of channel it was in. Yeah, I mean, I'm certainly not going to wait for it to go to 16.5 and then buy. So if you were buying the dip, you're in. If you weren't, then you're waiting for the next setup. But this is pretty.
It's another extension of a story that Ford's been putting out there for quite some time. Obviously, they're moving to EV, but the markets keep buying up these headlines, Matt, and these reports. What about your read here on Ford?
Yeah, I got a similar read as Tyler. I like the price movement. The question you always have on something like Ford after a news event when it's already up, 3.5% today, but really kind of up four bars from the pivot point is, are you late? At least for me, that's always the question I have is, am I late to the party? And I never want to be late I want to be the guy that shows up slightly late to make the appearance, right? I want to make the appearance there. And so I don't want to be the first. I don't want to be the last. And am I the last here on Ford? That's the question I have. It's already 4 days into the price movement. You're right, Ty. We have a no-sell day. It's going to be increasing volume on a positive news story on the backs of a couple upgrades. All of that is positive. Again, doesn't change the fact that I need to answer the question, am I late? And when I look at this, and the only way you're going to answer that is to map out the trade from a reward to risk ratio perspective. But one simple thing you can really kind of look at is from an intraday perspective, are you late? And so, Tyler, if you'll go down to an hour chart here on Ford, I think you're going to see a couple key levels that are fairly interesting from an intraday perspective. And one of them you've already broken out of literally on the intraday analysis to just barely, literally just barely. You got a horizontal support resistance level right there at about 1530. You just broke out of it. The day's price action, if you can see Tyler's trend line coming down, that just was violated today, which means even though you're 4 days into the price movement, this is day one of confirmation. And so I do not think you are late. And I also think you got a pretty good secondary trigger right there. And again, Tyler, you can't see it because you don't have the overnight action on, but you'll see it kind of coincides with the cash open last Thursday right there at about 1550 as well. And so I see a continuation trigger above 1550 here. I don't think you're late. I like the trade, and Ford had a very good trend for months and months. I like the stock, I like the news, and I like the potential trigger above 1550.
Yeah, I agree. Love the breakdown there, guys. And obviously, I mean, I don't know how long this same story is going to continue to impact Ford in a bullish way, but it's been doing it for a while. These EV headlines, and then moving into this, the market team seems to like it and be buying them up now.
Traditional car manufacturers evolving into EV, that storyline's got years in front of it.
Potentially, yeah.
Years in front of it.
Yeah.
Well, how many legs have we had on Tesla on that storyline over the last 10 years?
Well, that's right. And GM and Ford keep projecting out 2025, 2030, 2035 like
Yeah.
budgets on how much money they want to spend on this stuff.
Well,
So,
because they just started embracing this like 2 years ago.
yeah.
So this is something that they have invested in. This is something that restructured their companies around. I think this is something they're going to be focusing on for years to come.
Yeah, I agree. And then just another couple of quick ones here. Amazon, if we can here next. I keep watching this thing push up towards all-time highs after about a year of consolidation here has kind of really had a time correction nicely on those longer-term charts. Two different things happened in Amazon. They actually did get their sales numbers reported from Amazon Prime, beat last year's expectation, 11 billion in sales, up from 10.5, another 6% rise. Consumers are still out there, even in June. So far, trying to make 2 Christmases a year, Matt. They are finding a way to get people to buy there, obviously. Prime Day sales were strong, but also Amazon is going to be the target of the Teamsters Union, which is drafting a resolution to be voted on tomorrow to try to unionize more workers. But that's been a story that's been developing for quite some time, and actually union workers rejected Amazon in Alabama here just recently. One of the things I want to talk about with Amazon, though, is just simply this chart, because we fired up from 3,200 all the way to 3,500 here, Tyler. We are hesitating near resistance. Is this an overextended potential breakout, or is there something here because of the time it took on the long term to set this up? I mean, now, how do you read this chart?
Yeah, that's what makes it tricky is when you look at the weekly chart, you're not extended whatsoever. How can you be extended on the breakout when you just went sideways for a year, right? So longer term looks fantastic, and you really wouldn't have any reservation whatsoever buying a break at the 3,500. But yeah, on the daily chart, to be fair, I mean, it did just run up 300 points. It's up 10% in a straight line. So in an ideal world, this thing would chill out for a week or two, digest the daily upswing, let the 20-day moving average catch up, and then get everybody on the same page, give you a breakout over 3,500. You got daily traders chasing that. You got weekly and monthly traders chasing that. It give you a nice little confluence of signals. That would be ideal. Maybe it happens, maybe it doesn't. But either way, I think you've got to be interested over 3,500.
Yeah. Maddie, this is one I've been watching for a long time. What's your interest on Amazon after this year of consolidation pushing towards the high?
I think everybody is always interested in a company that, like Amazon, where you're threatening a potential breakout, where you have multiple time frame analysis, and where you started the conversation off, Tim, with the Teamsters news, right, and whatnot. And when you said the Teamsters, I immediately started thinking about Jimmy Hoffa.
Sure.
And I was like, oh man, Jimmy Hoffa went down to Alabama and was trying to get Amazon. When the reality was, it was more like, you remember that episode of The Office
with Daryl?
That's most likely what this happened. And so my head went to the Teamsters with Jimmy Hoffa and all that stuff. And it's like, yeah, go get him. And it's like, yeah, we probably know how this went down. So all of that leads to the conclusion of multiple time frame analysis on Amazon and the potential breakout here. I love Tyler's read in the short term. You love that potential breakout at 35,000. Excuse me, I keep thinking Bitcoin, 3,500. But you were overextended in the short term. You were running fairly aggressively up over 10% in less than 2 weeks. It's not a bad thing for a stock to take a little bit of a break as long as nothing gets violated. And last I checked here over the last 4 days, we're not seeing any weakness in Amazon. You're just seeing consolidation and hesitation before a breakout. And I like to call that the Allen Iverson two-step. It's a nice little crossover, but it's a good thing. Hesitation before the breakout, in my opinion, is always a good thing as long as support holds.
Yeah. I agree. All right, guys, I'm going to keep an eye on that one, like most everybody in the marketplace will, and be watching for that daily chart potential lineup with the weekly setup as well. All right, guys, let's move last into our segment we call Jedi Options. And this is one of my favorite things we do each week here on the Halftime Report. Each day we have different things that we design. With Coach Emily, we hold the Queen's Court, and I love that. And we have a lot of fun with that. Coach Frank brings his charts. Coach Greg, we play buy one, hold one, dump one. But on Wednesday, we get to dive into the, lab a little bit. We get to go into the risk graphs, into the trade tab, into the option analytics, like the implied volatility and the deltas and the gammas and the Vegas through the Greeks, and look at different strategies strategies and different ways to play things. And Coach Tyler is the perfect coach here as the architect of many option trading systems to lead Jedi Options here today. Coach Ty, what you got for us today on these two breakout candidates?
Yeah, so as you mentioned, I got a pair of breakouts, a couple of breakout trades. We're going to look at Costco and Tesla. So I'll break down the technical pattern, why I think they're interesting. And then we're going to look at the different volatility characteristics of Costco versus Tesla. These are two very, very different stocks, two very different stocks. And I'm going to show how that translates into the option pricing. And it's going to maybe determine the different option strategies we're going to pick. So we'll start with Costco. Costco was on our options report this week. Today is Wednesday, Tuesday, Monday. You go back to when we put it on the list. Remember, if you want to get good at identifying breakouts beforehand, everybody can spot them afterwards. Oh, Costco broke out. Oh, Tesla broke out. And that's fine. But in reality, I want to have the trade set up ahead of time. So what you have to do is you have to go back in time and say, what did Costco look like before the breakout? That is the pattern that you need to get good at identifying so that you're there, you're ready to pounce when and if it triggers. And so in this case, we didn't know if Costco was going to break out this week. We just knew it was primed. We knew it was close. So you put it on the radar. It has a pop on Monday, just on the doorstep of a breakout. And then yesterday it finally popped. And I think really regardless of what time frame you look at this, I think it's fair to say we can all agree it's a breakout. Mm-hmm. You look at the weekly chart and it's even more clean, right? It's just very high tight base, kind of a cup and handle pattern than the breakout. So it's triggered. So that's the Costco pattern. Now, the other area that is in play recently, we talked about growth stocks picking up the slack. Two charts, I think, illustrate that. So we already looked at the Nasdaq, but take a look at the ARK Innovation ETF. This, as I think we've mentioned before, pretty good proxy for how the market feels about growth. They loved it going up to February. Growth had a massive fallout from February to May. And now you can see over the past couple of weeks, this is back above all the moving averages, just quietly reversing back into an uptrend. And you can see today in particular, this thing is at the high of the day, up almost 2% when the S&P is flat, when the Nasdaq is flat. So you're seeing some short-term relative strength accompanying this recent trend reversal. Tesla, one of the biggest holdings of ARK, is waking up today. The first time I think bullish trades have been interesting on Tesla in a couple of months. And Matt was mentioning pre-show, this pattern actually looks similar to the Apple pattern that we highlighted a couple of weeks ago, which I'll show you here in just a second. But in terms of the setup going into the breakout, we didn't have Tesla on the radar, primarily because it hadn't yet given us a reason to. Yes, it could have broken out, but there was still some work to be done. Well, things have developed a little more since last Friday. And now what you have is a nice little, you can call it an ascending triangle, a little bit of a symmetrical triangle. But either way, we're breaking out of this volatility compression pattern. First breakout you've seen since the one in April. Now, the one in April ultimately failed. You're coming at this breakout, I think, with a better pattern than you were back then. So I've got higher hopes for this one, but there's no denying this is what people have been waiting for on Tesla. You're simultaneously taking out the 50-day moving average. So that is the second pattern that we're going to be playing with here. And then to show you the Apple comparison, we talked about this little Apple volatility compression 2 weeks ago, and it had a breakout over the 50-day and has continued higher since. Sure. That is the type of follow through you're hoping to get on Tesla.
Well, and one of the things that grabbed my attention when we were discussing, Jedi options here for today with these two different companies, and is that Costco and Tesla have very good breakouts on both of them, but they're different patterns. But they're also very different implied volatility conditions on the different companies. If you give me an IV graph on the bottom, I know that IV is a very important part of what you do. They're both at the low of their own personal volatility ranges, right? But Tesla's implied volatility and Costco's implied volatility are real different raw numbers when you look at them. Tesla's trading, I believe, I was looking at just a second ago, like 62% implied volatility on their average, where Costco only trades at like 18% volatility. So technical breakouts are technical breakouts, right? But the implied volatility underneath it can change the way you approach it in the options market. Both could be viable buys on long calls, absolutely. But there might be something else you can do with Tesla because of the higher print. Talk a little bit about that implied volatility implication here, Tyler, as you're looking at two different breakouts.
Yeah, I'm glad you brought that up. So what's interesting about this is at first blush, your takeaway may be similar in the sense that Costco has an IV rank of the fourth percentile. So it is at the lower end of its range, to Tim's point. And so is Tesla's. The IV rank is 7, meaning it's again at the lower end of its 1-year range. So at first blush, if you just look at the IV rank, you'd say, oh, options are cheap. So I want to buy options in some fashion. I want to buy calls or a call spread. And that's true. But when you go one step further and you say, well, what is the actual absolute volatility number? Yes, 62 on Tesla, 18 on Costco. Night and day difference, night and day difference. So even though Tesla's at the lower end of its range, its general volatility is still quite high, which is going to translate into very pricey call options. Now, they're not as pricey as maybe they could be. They're still pricey. They're still pricey. I'll get to Tesla here in a second, but I want to look at Costco first so you can kind of have a comparison here. So if I wanted to buy a call, and remember that we're dealing with expensive stocks to begin with. Costco's $392, Tesla's $652. So you just know already right off the bat, the calls are going to be priced a little bit higher by virtue of the expensive underlying share price. Even still, though, Costco, if I go out to August, maybe a 2-month call option, Costco's at $392. If I just buy maybe the at the money, I'm actually going to cheat a little bit and go first strike out to try to make it a little cheaper. $9 is not all that expensive for a $400 stock. Percentage wise, if you paid $9, stock is $392, you're paying about 2.3% of the stock price for the call option. So $900 may seem expensive, but when you price it versus as a percentage of the underlying stock, it's not that bad. In comparison, Tesla, if I go buy the first call option, kind of first strike out of the money, you're paying $53.70, which as a percentage of the stock price is about 8%. So 2% of the underlying price for a call option on Costco, 4 times that amount, 8% on Tesla, which is what Tim alluded to earlier. That makes buying calls on Tesla pretty tricky. You're putting up almost $5,500. Even with a decent stop loss, Tim, I'm probably down a couple of grand at a minimum if this call goes against me. And so I think I could get away with buying a call option on Costco. I think of necessity, I'm going to have to do some kind of spread on Tesla. Notwithstanding the low IV, I'm still going to have to do a spread to make the cost palatable.
Well, and if you go back to the chart here real quick, I mean, if you were ever going to say it's a good time to buy calls on Tesla, you could make that argument now. So, I mean, we are pre-earnings, right? It's going to have a nice IV build into earnings. We're near the lower end of the IV rank, but just understanding not only IV rank, but raw implied volatility percentages can really help you understand what you're paying for those derivative contracts, which we call options, right? And I'm glad that you did both of them first out of the money, so there was some consistency there. But Costco, obviously, is going to be a much, much lower cost relative to the stock price, just because it's not the same kind of company. Remember, options are a reflection of that company's risk or the assessment of the market, in terms of interpreting that company's risk moving forward. So yeah, you're going to pay more for Tesla. You're going to pay less for Costco. It changes the way you would approach it, even if you want to play them both delta based, which is what breakouts kind of allude to, right, Ty?
Yep.
Yeah.
Yeah, 100%. And so to build out the Tesla spread, you don't have to do anything fancy here, right? Like you don't have to get crazy and doing some kind of diagonal spread or complicated butterfly. It could be as simple as saying, look, I just want to make this call option cheaper. That's all. I like a directional play here. I like the breakout, but I can't afford this $5,400. So all you have to do is decide, what can you afford? How much are you willing to put into this? If you just focus on the cost, it actually makes the decision easier than even getting complicated with what's my net delta, what's my theta, what's my vega. I don't even think that we need to go that route. You can just say, look, if you bought the 655, at a minimum, Tim, I mean, you can sell the 660. Now, I don't think anybody would ever do a $5 wide spread here, but let's just prove the point. If I just sell the very next strike, I just took the cost from $5,400 to $235, right? So I don't have to be scared. I don't have to be deterred by the fact that Tesla's a $650 beast. Shoot, I just built a call spread for $200, right? Now, $5 wide spread, probably way too tight on something like Tesla, but you could. So I would just kind of widen this out. Do I want to do a $10 spread for $4.50? Do I want to do a 20-point spread for $9? You can kind of find. So right there, actually tend to make it.
Let's keep it. I was just thinking the same thing. Let's keep it right there, because then the cost is going to be the same relative for both of them.
Yeah. So the long call for $9 on Costco, or the 20-point wide call spread for Tesla, both trading around $9. Now I can really say, look, cost-wise the same. I can make the risk the same. Maybe just which chart do I like better? Do I like the higher octane, more volatile behavior of a Tesla, or do I like the slower, steadier nature of a Costco? I mean, there is a difference in the sense that the Costco long call has unlimited profit potential, but maybe I'm not expecting fireworks from Costco, so I'm not expecting to triple my money anyways. Tesla, I'm limiting my profit potential because it's a spread. It's a 20-point spread. But I only paid $9. I can still double my money on the Tesla trade. So it's not insignificant. It's not insignificant.
I agree. And I like that we're looking at this from a relative cost perspective on the same way. And now I'm looking at the charts, thinking about targeting and all that kind of stuff. It's got my brain now moving here, Tyler. I like the conversation. Maybe we can look at the risk graph and kind of just model, okay, now that we've got the cost where they are, what would be the relative profits or losses if they do make a small move up or down on these two different trades, and kind of compare them. Can you do that for us?
Yeah. So looking at Tesla, like what would be a potential target? I would look at a couple of things. So the first thing is this stock moves about $20 a day. Okay. It's up $30 today. So you're up 1.5 ATRs today. So today is a substantial move, higher, more movement than usual with Tesla. But the point is, if you're going to target $20-$40 away, that's not outlandish, right? This is at 650. Could it go 670, 700? I think completely doable. From a support and resistance perspective, the next major resistance is up at 775, but that's probably a bit optimistic. That would be like maybe a T2, a second target. Initial target here, I don't know, Tim. I just kind of gravitate to the whole number around $700. I think is a realistic first target.
Yeah, I think it's definitely realistic within pay ranges and volatility expectations for Tesla. I mean, it's only going to be a $46 move from here, which isn't a nice percentage move, but it's a couple ATR, right? Yeah, for sure. So a 2 ATR move on Tesla, what does that do for us?
So it translates if I get there immediately, okay, I'm making about $260. Okay, so 260, I had to pay about 900. It's about a 30% return. But The trade gets better as time passes. Once you're above that 675, the higher strike, or even when you're just closer to the higher strike than the lower strike, it becomes a bit of a cash flow play. So if this gets to 700, but a few weeks go by, then you're going to see the profit sweetens a bit, right? My profit's going to creep higher as time passes. So 260 plus would be the profit target if this thing takes off to 700.
And the inverse is true if it doesn't work, by the way. It actually gets worse over time. That's where you look at the risk graph here. Profitable debit spreads, actually time benefits them. But if it moves against you, say 1 or 2 ATR to the downside, we're at 657 right now, down $20. That loss actually is going to expand as time passes. So you don't want to really be patient with debit spreads where the technical charts just absolutely blow you out of the water if it does not work out, right? So you kind of want to have a plan in place on both sides of that. Yeah.
Correct. And I think the chart pattern lends itself to, pretty easy decision on where to put your stop, right? The premise is Tesla's breaking out. What would have to happen for that premise to be wrong? Well, I don't know about you, but I think we could say definitively if this thing breaks back below 608, it came back into the triangle and then it broke the lower end of the triangle, like you were wrong. Okay. So 608, and I think that's a loose stop. You're risking about a third. You paid $900. You're risking about 300. Mm-hmm. Not sure I need to let it go much further than that if it goes in the wrong direction.
Yeah. So at T1 versus your stop, you're pretty close to 1-to-1 reward to risk. So you'd be looking at a T2 to really hit a nice profit here on Tesla, which is the nature of a bull call spread. Quite frankly, there's a lot of times you can be patient with them. What about Costco? I mean, if we were going to go the long call route, looking at maybe a 2 ATR move to the upside so that we have consistency, because Tesla can move 8%, right? But Costco's not going to move 8% in the same fashion Tesla is. So what would our profit loss expectation be looking like on Costco here with the long call?
Yeah, so ATR is $5. So 2 ATRs would be about $10. It's at 392. So you're looking around 402 as kind of a 2 ATR profit. And then I would just model out that long call we were looking at. So I'm going out to August, a couple of months. And the assumption here, I'm going for a couple ATRs. I'm not going for, 10 ATRs. Then we need to buy a 6-month call, I think, to try to go for a 2 ATR move, right? So the assumption here is that August gives us sufficient time, not going to hit us as hard with the time decay as a July would, but buying that AUG 395, midpoint's about 890. So again, right around the $9 price. You take a look at the risk graph, big difference with this guy is you do have unlimited potential profit, with the understanding that we're talking about Costco here, we're not talking about Bitcoin. So if I look at, I got to take the time back to today. So if this thing pops to about 402, you're looking at about a $500 profit, which is over 50%, which kind of makes sense. The bull call spread is a more conservative trade, getting a 30% return on a 2 ATR move. The long call on Costco, the more aggressive trade, getting about a 50+% return, which kind of lines up with what we understand about these two strategies.
Yeah. And then on the loss side, I mean, if we take 1 or 2 ATR to the downside, you're obviously going to see, that loss come in as well. Where would a stop out be here on Costco so we can model that a little bit?
Yeah, so same thought process, right? My premise was it's a breakout. What invalidates the breakout? Well, certainly I would not let this get below maybe 380, 379, somewhere around there. It's not only come back into the breakout zone, it's broken to the downside. So let's call it 379. And you can see you're risking about the same. So shares that 1-to-1 on a 2 ATR versus decent stop loss. It's just the percentages are higher, but it's the more aggressive play of the two.
Sure. All right. I love it. I appreciate the breakdown there, Tyler. And obviously both technical breakouts are valid. And one of the things I like about Jedi Options is a teaching segment we're doing here on Wednesdays. It allows us to kind of dig into even some of the most subtle things, like the difference between a bull call and a long call on 2 different patterns because of the characteristics of their volatility. So I appreciate that analysis and that breakdown right there, Tyler. That's great. Let's bring Coach Matt back in here as we start moving towards the end of the show. Matt, any thoughts just on Costco and Tesla as Tyler and I were discussing it. Yeah, pretty simple, straightforward breakout
No,
stuff.
honestly, whenever I get a chance to sit down and listen to Tyler talk about options, I just enjoy it. I just enjoy the breakdown. I enjoy the quality of the analysis. I enjoy the going from point A to point Z instead of just here's a trade. Oh my goodness, look at this. Hype it, hype it. Like I hate that stuff. I like detail. I like analysis. I like the in-depth type conversations. I'm not the dude that loves 3-minute videos. I'm the dude that loves to geek out over a 3-hour concept, right? And so I really thoroughly enjoyed it and just wanted to say thank you more than anything.
Yeah, me too. I love this segment here, Tyler. Great job on it. Let's start getting some final thoughts on these broad markets here on a Wednesday. Doji Wednesday, hitting near resistance. The sector's telling much, better story about actually what's happening in the market. You guys did a great job analyzing it earlier in the show. Matt, just final thoughts for the team out there, as we wrap up our show.
Not a whole lot of final thoughts on a Doji Wednesday, but again, the media is kind of frustrating me a little bit the last few days with these reports. Yesterday's report on Bitcoin's death cross, when loosely applied, there's no scenario Bitcoin's even remotely close to a death cross. Like, it's not even in the cards, not even in the same ballpark, it's not in the same universe. It's not in the same universe. Today, cyclical trade is back simply because the last 3 days, cyclical areas are up relative to the market more than some of the other areas. But that lacks complete context, complete analysis, and it adds nothing to the conversation. And so the last thoughts that I'm going to leave is simply this. When you're dealing with times like today where maybe the market's confused, maybe you're confused with what is happening, whatever it is, when you don't have a clear view of what's happening in the market, just revert back to technicals. Literally, revert back to technicals. Technical analysis tells the story of price action, which is based on all of this, me, you, Tyler talking, the media, market participants, Wall Street, government, central banks, world, everybody's belief system, everybody's thought process, everybody's theories and philosophies and everything. And it makes it a visual identification of that. And so when everybody and their dog is saying something, revert back to technical analysis, because that will tell the story of what is actually transpiring in the market. And right now, you're seeing the continuation of what we saw the last couple weeks of money coming into growth and out of cyclical. And even though cyclical is performing fairly decently over the last 3 days, it's got some very challenging environments from a technical perspective as it fights through those resistance areas. And it may do it. We are in a bull market, guys. It may do it. We are looking at increasing inflationary projections. It will do it eventually. Okay. Maybe it does it this week. Maybe it does it next week. Maybe it's 4 weeks from now, but it will do it eventually. But what is simpler to me is when you're looking at healthcare and a potential breakout in healthcare. What is simple to me is the breakout that we saw in technology. What is simple to me is discretionary lining up on the right shoulder breakout and breaking out there as well. And so that's the beautiful thing as a trader. We have our belief systems, but we're always going to go where the money goes in the market. And if you master that visual identification of technical analysis, you can at least always go where that goes.
I love that. It's wonderful advice. And, rely on technicals whenever there's a bunch of noise out there that you have to kind of cut through and focus in. Rely on the charts. I love that.
Anytime volatility happens, I narrow my focus and I literally zone in on technical analysis. It's my foundation of every form of analysis is technicals.
I love that. Tyler, final thoughts from you.
Oh, I'm just tearing up over here over this glorious discussion of how technical analysis is just fantastic.
the certified master technician over there.
Like, preach it, baby. Preach it, baby. I'm digging this strength in small caps today, up 0.75%. Not bad. Again, I swear, broken record every time we get on here, but this is why it is so hard to be bearish. You have to be so depressed this week, right? You thought you had him last week, man, and then it's like, oh, lost it, fumbled it. Where'd it go? We're back up at highs, man. Sucks to be a bear right now. I like it. I like it. Come join me on the trading labs. Listen, I don't know if there are. They hate themselves this week. That's all I'm saying. But join. Where there's no bears, at least not right now, in the trading lab. Come join me. Go ahead.
When I take a bearish trade, I don't even tell Tim these days.
You keep it from your friends. You feel dirty and you take that.
I'm sorry, I had to.
That's too funny. That's too funny to me. Oh goodness. By the way, I do the same.
I know. We all do. We all do.
All right, guys, that's it for our show here on a Wednesday. As always, appreciate you guys, like Tyler just mentioned. Join us in those trading labs. I dropped another link with a bunch of information and resources on that page to learn more about the trading labs. Obviously, there's a 15-day trial, pretty easy offer to get started, get a feel for what it's all about. Join one team or join all three teams, and we are starting those labs very next week. Tyler and Matt, appreciate you guys as always. We got Trade Masters tonight, everybody, 7 p.m. Eastern Standard Time. So don't miss that weekly event where Coach Mark has two coaches battle each other over who can bring the best trading candidates and trading picks. And I believe Coach Greg is battling the champion, Coach Frank, here this week. Should be a very, very fun show.
The fundamental versus the technician.
Complete different approaches, right?
Love it.
Yeah, I agree.
One other thing, Tim, we do. Speaking of bears, there is Bear Market Survival Guide Mastermind Group meeting tonight. I think we're all just going to. Talk down to bears tonight. I think that's what we're going to do.
I like it.
Yep.
Any events we hold, just check the events calendar over at Tackle Trading. I appreciate you guys, Team Tackle. We're out for Wednesday. Have a wonderful rest of